Mr. Market or The Market with Govinder. I hope you've been having a great start to your spring, and we're going to continue our topic on the real estate market in Ontario and in Canada. I'm going to show some data and some information here as we go throughout. We're going to talk about what we're seeing in the market. How is the market behavior or sentiment changed? And I'm seeing in the market, and I hope you may be seeing it as well if you're in the market to buy a home. Obviously, for sellers, the market has definitely changed, and we'll go throughout this in this video. We're going to talk about terminations, what we're seeing on the market, number of active listings, and then just look at some data and some home sales that kind of show and kind of meet that perspective of what we're seeing in the market in terms of a bit of a slowdown here. And obviously what's going on in Calgary, which is a different story, but I think they're more catching up, which could be a lagging indicator where this market is headed. So we're going to kick it off here. I always like to put it out there, this video is my perspective. It's definitely the perspective of the Twitter threads I'm going to show throughout. So if you're looking for advice, you're looking for another perspective, or you just, you have some questions, reach out to your trusted advisor, as they can definitely help. I'm a wealth management advisor myself, so I definitely pride myself in providing expertise, and I always encourage people to seek out advice when they need it, when they're unsure or they're just looking for another perspective. Just as we continue, my wife and I have been talking about this data for quite a bit, as we're definitely in the market for a detached home, and this information is definitely helping me as well in terms of trying to make a decision here of what am I seeing in the market and how do we prepare and be ready for it. So kick it off. So we're going to talk first here about thread here from Scott Ingram, and the second one is also from him. He's a real estate market or real estate agent in Toronto, focused on the GTA, and he loves using data, and it's definitely great perspective, and I wanted to share this with you. We're going to start off with terminations for 416 condos and freehold homes. So terminations is where you list a home on the market and then you terminate that listing saying I don't want to sell it anymore. And then obviously terminations doesn't mean, some people take it off permanently, some other people just relist it at a different price, and that's going to help us with some perspective of how the market is going at this point. So let's kick it off. I've been tracking terminations to see if the market is turning or easing, so it's definitely a leading indicator, or it tells us something about the market, I have to say. From a 416 condo perspective, you can see this rising. 5 weeks ago, this stat was at a recent low, so 7-year average, or at least the last 7 years. Now 29%, which is within normal range. The 7-year average is 25%, and you can see here on the chart that we're at 29% of weekly terminations as the percentage of sold. And what does this mean? That's what you're going to be asking. Like, what does this mean, right? And I'll get to that very shortly. So condos have lagged freeholds on the stat, but finally looking like 20% over list activity is wanting. So that is where a property is on sale and the price is going up over than 20% compared to what the sell price is. And you've seen this in the market. You've heard the stories. The house will be listed for $1 million. It'll sell for 1.2, 1.3 million. That's what I mean by terminations and that activity. And that is really an indicator of the market changing and buyers changing, the sentiment changing, and how the sellers are going to adjust to that. And here's a chart for freeholds after 4 weeks in a row of half of the cities house sales going for 20% or more over listing. The last couple of weeks have gone down below that figure, so we can see that the trend is changing. There's less homes being sold for greater than what they're being listed for. And I'm going to show some data close to the end of the video where we see that. And obviously that's in pockets. It's not happening everywhere, but it's happening in pockets. So definitely upward trend for freeholds. 7-year average was 34%. Now it's at 43%. Absolute termination is about the same. So 132 versus the week before 138. And absolute terminations is where they don't come back on the market. So 100 less due to March break. And March break obviously has an impact on this because people are traveling, and definitely with COVID restrictions lifting, more people are traveling. They're thinking more just about than buying homes. So I also made a comment here on this tweet, it's great data. I said homeowners relisting at the price they expect to receive. So that is a change in the behavior. As I was mentioning before, that there's buyer fatigue, interest rates are going up, and obviously they're tired and they're rethinking. And we have sellers, expecting to list low and get high, which is definitely a change in the marketplace. So on that point, let's continue along and talk about listings. As we know, active listings are probably the most important data point in terms of pricing in the market. So and this is also a thread by Scott Ingram as we continue to follow on that trend of the termination. So weekly update on active listings. They dipped last week, obviously, for March break, and now they're on their way up as they do in normal years. So pre-2022 is what he's referring to normal years. And you can see this in the fresh listings. I won't open up this chart, but I'll continue along and show you the numbers here. Here's 416 freeholds back on track after dipping last week. Bigger dip than normal, but I suspect there was larger than normal travel demand this year. As we know, more people are going to travel or did travel for March break. Still about 300 lower than last year and the lowest of the last 5 years. So saw the dip for March break, the numbers increasing. So 1,443 active listings in the 416. That is still historically low. Inventory is still definitely low in terms of active listings. As you can see, last year this number was definitely higher, above what we are currently. So there are still less homes on the marketplace to sell. But again, the buyer behavior is changing. The seller behavior is changing. We may see less number of openings or people coming to showings, the price that they're willing to pay for it. But again, it's in pockets. We're going to see some markets continue, some markets, depending on the geography, we're going to see that. But this is just a starting indicator. For condos, if you're in the market and curious, here's 416 condos, which actually didn't dip last week. Still about 200 lower than the same time last year, but more in line with recent years. So we can see some stabilization in the number of active listings for 416 condominiums. And lastly here from this thread is, here's a build of the freehold inventory. Can see the dip in fresh stuff. So he's quotation fresh because he was talking about terminations. People are terminating and relisting at the price they expect last week, but back building up on new listings now that the March break is over. The 1,443 is about 80 more listings than when he checked at 11:30 a.m. yesterday. So this is from March 22nd. He's comparing it to March 21st here, the day before. So I'd love to hear your thoughts. What are you seeing in the market? Has your behavior changed in terms of, are you in the market to buy, or are you in the market to sell? So love to hear your perspective of what you're seeing in the marketplace, as that definitely helps everyone learn. And lastly here, just let's look at some home sales here from Six Sigma. This started from a tweet from Steve Zareski. The going rate for a 5-year fixed mortgage is now north of 3.5%. If you're watching this, 3.5% has not been seen since pre-pandemic, so this is definitely a big deal. At all the big banks, this will act as a brake on the housing market in the months ahead. This is again Steve Starowski. He's a real estate agent based in BC, more on the West Coast, and definitely is a close follower of macro and credit, economics. So I definitely appreciate his perspective. And then you can see someone tweeting here, we are already seeing breaks and even reverse in prices in some cases. So let's look at these two homes here. Again, the descriptions will be in my link, or sorry, the link will be in my description for you to check out this information yourself. So you can definitely pull this up to see where you're seeing this. And if you have the app House Sigma, you'll be able to check this just based on the data. So you'll see here, this house here listed 3+2, 2 baths, 1 garage. Again, I don't have in terms of where it's located, but this is just some behavior. In January 20th, 2022, it sold for $831,000. It sold on March the 10th, 2022 for $770,000. And this is in Niagara Falls. It's a single house. So you see that's the market change in Niagara. But again, it could be a one-off, but we're starting to see this, whereas the last greater than a year, we definitely have not been seeing this. Another example from the same thread, this is a home from Oshawa. Oshawa and Durham region have been on fire, increasing 45 to 50% in the last year. So 76 Orchard View Boulevard, Oshawa. On, what does this look like? On Feb 14th, it sold for $1.180 million. It sold on March 17th, 2022 for $1.05. So, This market, as the comment here, Toronto GTA market has started to dip. Sellers, investors, flippers have started to cut losses and liquidating. I think this is kind of sending a sense of panic, which I don't agree with, but I just wanted to share this perspective with you. Now it's the race to get out of the market. Crazy times ahead. Stay tuned. Worst time to buy a house, in the Canadian marketplace or Ontario marketplace. I would say it's probably stabilizing rather than it being a panic or disasters ahead. But let's be realistic. There's definitely going to be a changing market. Interest rates are going up. We know that from the Bank of Canada. The question becomes how many times in 2022, how the economy reacts, how investors and the market reacts. That's to be seen. So that's the uncertain part of it. And we'll definitely see a stabilization here. But then if we look at the opposite here in Calgary, you can see here it's happening in Calgary, which Martin here, he's a market strategist, CFA chart holder, and senior portfolio manager with TriVest. And he brings us his perspective as he's located in Alberta, Calgary. So we're seeing the opposite here in Calgary. So it's happening in Calgary, bought in April 2021 for $945,000, is listed a year later at $1.3 million. So a 37.5% increase here in the sale price of this home. So again, Alberta, Calgary, their marketplace has, real estate marketplace did not have that such a price appreciation as other, definitely Ontario and BC has had in the last year and a half. And this may be a lagging indicator of, hey, we're at the end of this cycle in terms of these price increases and we're seeing some stabilization. So that's the video for today. I hope you appreciated it. I hope you found it valuable, me coming at you with this information. And I'd love to hear your thoughts, love to get a like or a dislike. Just here's your comments. And obviously, if you appreciate me coming at you on a weekly basis, please do subscribe, as I'm going to be continuing this topic. And what my goal is with this contact is to share with you how the market dynamic is changing. Where is it heading? What are we seeing? And what potentially could be the ramifications of policy changes and just the behavior in the marketplace. So I hope you found this valuable. Appreciate you checking out this video. And if there's anything else for me and I can be of any help, please leave a comment below or reach out to me on Twitter or Instagram. So have a great day, have a great weekend, and have a great week. Thank you so much for watching.